how many of you think you will be able to claim benefit of free zone? How many of you think? No. Then why we are discussing what we are discussing? Because if you still feel, I will remove that ambiguity also in short span. So to be honest, I don't see a lot of people getting interesting benefit on the free zone space, because how the law was designed is amazing. They said you read, you do research, you come and do Saturday spending, but 0% not possible. Let's look at some of the things. So this is 0%, this is 9%. So you can see the difference, right? At least 10 kg. So that's a difference you will see in the whole section also. One thing which I think everyone is still discussing, designated zone, having a business with the mainland, all that is fine, right? We'll get a benefit of 0%. Yes, no, maybe? Yes. Please read the underlined words. The transaction has to be a designated zone transaction. If I buy from a mainland, will my transaction be a designated zone transaction? No. Then how we are getting into the corporate tax? Transaction in and from designated zone. That's the starting point I will start with. There are multiple things which we are going to talk about. Free zone, everyone said free zone will have a benefit, but the law says cabinet at the suggestion of ministers will tell which are the free zones which will get the benefit. Anyone of you have read the document? Which are the free zone as per corporate tax? The word says, let's read the law. The problem with me is I read the law, nothing else. Free zone, a designated and defined geographic area within the state that is specified in a decision issued by cabinet at the suggestion of ministers. And we are not talking about VAT law, we are talking about corporate tax. Had any one of you seen this document? That means we don't know which are the free zones. That means we are at ground zero so far. But however, FTA had said this thing in a lot of public forums, but no official document. They say go and talk to your free zone and take the confirmation that they are designated defined free zone. This is not designated zone as per VAT, designated defined free zones. That clarification you have to take. So first point, if you believe you are going to get a 0% benefit, please write to your registration authorities.
They'll ask you to go to a consultant.
I don't think so that for this point. For this point, no. We have seen free zones outrightly either replied or they said please refer our website, and they have demonstrated in their website that section. JAVSA has done so very clearly, DMCC has done so very clearly. So a lot of free zones either they have put up in their website or they are replying. Rakesh is replying because within RAC you have one license but two zones. One is designated zone, one is free zone. So they are replying. So that's a pointer which I will say. First thing is attempt. You never know when you get an answer. So a lot of time we don't even attempt. In life and career and profession and everything, please attempt. You may not know what comes out of that. So that's a first pointer which need to be looked at. A lot of things are there, so I'm not going to touch any specific thing. I have brought up some pointers which are there in the return itself. And that's where we are going to go into. One has not elected to be under Article 19, which is very clearly articulated by previous speakers and which was done. There are subject to taxes, how that is also being defined at 0% or 9%. There is no threshold. Everyone knows that. Now this is where the condition comes, shall ceases to be a qualifying free zone if you break any of those conditions from the beginning, not from the further. At 4+ years, everyone is talked about. 5 years condition. Are you meeting the conditions which are defined? There are multiple conditions under Article 18 which are defined into and being talked about. And there are other conditions also. So that means 18 plus audit and de minimis, these are the conditions has to be followed. I'm doing some kind of a recap also because I'm going to give you an interesting pointer on this. Now if you see, there is a section which says, give me a detail of your domestic and foreign P. How will you identify that? What is my domestic P? Anything which is outside the free zone or designated zone in case of distribution is my domestic P. And anything which comes from there is defined as a domestic P. One question which came from so many people, how they will know where we are operating from. Correct? A lot of people come from the home country and they listen how ED investigates, how IT department investigates. How they investigate? How they investigate? They will call your employees, make them sit for 5 minutes, and they will, no, they will vomit. What is not being eaten also will come out. So that's the first pointer. Second, IP addresses. Very basic thing which anyone, any authority looks at it. 3, if UA authority wants to know where you are sitting right now, then know it. Let's not judge that. So that question, how they will know, please take it off, because they will know what is happening. So a lot of people say that I am working in DMCC, my server is in DMCC, but we are working for JAVSA, right? Your server was in UK also and US also. If you are scanning, looking at Google and all those things, that may not work in our favor. Very clearly, substance people have talked very in detail. Please look at that. Who is signing the documents, from where the people are signing the documents, who is writing the email, whose signatures are there on the email, all makes a difference. A lot of people say, no, all transactions are done by them only, all invoices are sent by them only. No problem. Can I have a full trail of chain? One small audit gives the whole Pandora box out if it is not done in the right way. So you have to perform, you have to demonstrate, you have to act, and everything has to be done, and you are self-auditors. So I don't think there is a question which is coming up on that part. So domestic and foreign P both are subject to 9% tax. The beauty is they are not counted under the de minimis calculation. That's a beauty which is giving a benefit to us. So it's better if you have a challenge, convert those transactions into domestic P, pay 9% so that you don't get up stretched out into a de minimis working. That's the pointer which comes, and this is the calculation. So you're putting up those values in the FTA portal, and they themselves are calculating for you that you are reaching the de minimis, you are getting a free zone benefit or not. So it's not that you can hide those things. So design of the form was amazing. The first time when I saw it, I loved the format and the way they have asked the information. They put all the ownership, all the action at your end itself. Next comes a very interesting thing, how the domestic P is being defined. They just changed the law itself. They said go and read those information and define the domestic P. Anything which is conducted from home, a lot of people keep asking on, is also a domestic P. Period. There is no discussion whether you woke up and just to approve the transaction or just send the invoice. Sorry. As per definition, as per law, right now those are considered as a domestic P. And if I do conduct a business from a domestic P, the sales value of the whole transaction comes as welcome. So they've used the word geographical area outside UAE and outside the free zone. Technically they're talking mainland is what we refer to. Non-free zone, very important definition, includes anything which is not a free zone, which can be a mainland, which can be a foreign entity also. Interesting point which comes further is on the de minimis calculation which we talked about. I very clearly said 3 broad activities which are outside the de minimis working: domestic foreign P, property, some of the real estates condition, and IP. Except for that, everything gets calculated from a de minimis calculation perspective. Now, under intellectual property, interesting points already being covered, so I'm not referring on that again. There is a percentage calculation, you get a benefit of more than what you spend, and this is how the calculations are. So this is an interesting sheet just to maybe when you are filing a return, you can always refer to. That will be helpful in your process also. Now this is where This is where some of the things comes as part of it. So what is the beneficial recipient definition? I'm going to repeat again, because you have heard the beneficial recipient definition. We are going to repeat some of the instances and from a very typical example which FTA has also given. So one of the beneficial recipient definition is the other party should not be benefiting from a transaction. So one aspect which everyone said is, I have a free zone company, I'll create one more free zone company, and then that company will transact with the mainland. Correct? So technically for me it's a free zone. For other entity, we'll see what tax is to be paid, we'll look at it. Is that the only condition? I'll just translate it to a very harsh statement. You cannot do distribution business between free zone to free zone if you are not a designated zone company. I'm giving a very strong statement. You cannot do a distribution business. I'm excluding the commodity trading, please exclude that. You cannot do a distribution business which is not a commodity trading, which is specifically defined, between two free zones unless you are a designated zone company. And why I am going to that conclusion or comments is because of the example which is being brought up into the cabinet decision, and this is where we'll start. I have an audit firm which is in free zone. I have a client which is a trading client also in free zone. I have only this business. That means I only serve a free zone companies from audit perspective. Is it a qualifying activity? Any doubt? Is it a qualifying activity? So free zone to free zone, audit services, it is a qualifying activity. You don't have to pay any taxes. If you are doing only this business, you can stick to 0%, check de minimis, little bit attestation and all those you can do, but don't cross that 5% threshold or 5 million as the case may be. 5 million is a very far-fetching for an audit firm to get 100 million top line. Now this is one part. Now let's go to another transaction. I have an audit firm and I am doing an audit for a trading company, which is also a free zone company. Now this trading company has Chinese partners. They said, Rajiv, I want translation to Mandarin. Can you help of the audit report only? I went to a company which is a free zone company, right? I got the activity done. First transaction, free zone, non-free zone, I'm doing an audit. Is this a qualifying income? No, because I am doing for a non-free zone person. Now for this case, I am doing a translation activity. Who is a beneficial recipient in this case? Is it? Is it? What he wants an audit or translation? What he wants, audit or translation? He wants an audit translated. What is the core activity this guy has done? Audit. What is the activity he has taken? Translation. So is it not an input of an audit firm? Can this company go straight for a translation and take the report? They can. There is not an audit firm. But first thing is what you want? Translated audit. So he has to pass in from him only. Am I clear? Can he do this activity straight? No. Then he cannot be the beneficial recipient. First, understand the concept of beneficial recipient. Are you with me? If not, you will be me in the next slide. Now in this case, I have same audit firm, same non-free zone trading company, same translation company, but this time it's not an audit. He said, I have a document, please take. Since you are helping me in getting translation, get it done this also. He took the document, transferred the document, got it translated, send it to him. Who is the beneficial recipient in this case? Now you got the difference? Is there anything this guy is doing in between? Charging some 20% fees, which is fine. But otherwise, is it possible if this trading company comes directly and get the work done? In this case, yes. Are you with me in the previous and current example? In the previous example, this gentleman cannot be ignored. In this case, I can ignore. If I can ignore, the beneficial recipient story changes. So let's look at both the activities. So this is what I have referred to. In this case, you have a legal obligation for doing an audit and all that stuff. Hence, it is for this entity, it's a qualifying activity for translation company. In the second case, for this activity, it will not be a qualifying activity for this translation company I'm talking about, because the beneficial recipient is a mainland entity. Are you with me? This is an example I picked up exactly from guide, just change some roles. Instead of a legal translation, I made an auditor so that you understand it much better. Now let's see both comparisons, look at that very easily and you can quantify it. What about goods now? I'm putting the same example, but I'm changing from audit services to goods. I have a non-free zone company, which is a trading company. I have a free zone intermediary, and I have a free zone trading company. Free zone to free zone transaction, everyone said it's a qualifying. I'm not doing any value addition. There was no pre-order also. I'm putting a condition before itself. But can this gentleman go straight away and get the goods?
Yes.
Unless you do some value add here, unless you add a part here, unless you assemble here, unless you do something, how can I define that this is not a beneficial recipient? This is a question I'm asking now. Can we? Did I change any stand between the previous example and current example? Who is a beneficial recipient in this case? Can it be a qualifying activity? Fit in any trading activity, distribution activity in this example and tell me, can a free zone person do a distribution activity between each other, not quantifying it to be a qualifying, not quantifying it to be a beneficiary recipient? Yes, there can be. You sold stationery and this guy used that stationery. No problem. You sold a product, he added some value addition and sold, no problem. But pure trading activity, if it is between the three parties, can it be qualified as a qualifying activity, free zone to free zone goods? Under what condition we can have this as a qualifying income? I am not able to get. First is beneficial recipient test as per the current conditions, which is quite loosely being discussed and talked about, are getting the interpretation that, sorry, if you're in a goods business, not commodity, designated zone is the only way to get into. That's where things are getting stopped into. Further, now there are various sections which says revenue derived from transaction with free zone person that are the beneficial recipients of the relevant services or goods. So you need to define it in the return also. So you need to identify, how you will identify that the other party is not a beneficial recipient or is a beneficial recipient. And it has no reference to the related party transactions. They have not put up anything on the related party in this case. Otherwise, the simple point was related party. There is a very good terminology which is used in AML also, anti-money laundering also, conduit. And which is where the beneficial recipient story is coming up. If I become a conduit to pass through a transaction, that means I take a transaction here, I do something and I pass on, and technically I'm not doing any value add. Please understand the point. Value add. I'm acting as a conduit. The moment I do a value add, definition of conduit breaks. Coming up, interpretation from the AML angle also. That is where all the sections, when you bring it up, this is where you get into the pointers. Nowhere in this page they are talking about related party. Otherwise, they would have said RP transactions. If they want to just catch that, that's not the point. So if you create also, do a transfer pricing also, you fall still. That's where the section goes in. Further, this is the definition of de minimis which is being brought up into. I'll go straight away to one more pointer again. Only 2-3 points I'm going to talk about, which are, as I believe everyone has learned too much on the free zone, where there is a dispute or there is a conflicting view that has to be looked into. Distribution, if you select the activity, it very clearly says to a customer that resells such goods or material. We are talking about distribution now. That means, can I sell to a end user in this case? B2B, but end user. I am doing bigger generator sets and I supply to the factory to be used in the factory. I am in a free zone, designated zone, everything under custom suspension, everything is fine. Can I get a benefit?
Says both commercial and industrial use. Even if it's an end user before industrial use, it would be an end user.
Very, very interesting definition or interpretations which are coming up in this section also. I'll give a perspective on both sides. I gave one example. I'm a factory. I purchase DG set. I put that DG set in my factory and I'm producing some XYZ material. Second, I am a car manufacturing company. I purchased a lot of batteries and I use those batteries to manufacture the car. Am I end user in this case? I'm not the end user. So,
the guide actually says that the batteries should be, you will not be an end user. If the goods are meant for you, you become the end user. See, ultimately, me as a buyer of car would like the car, not the batteries. So the end user in this case could be the car manufacturer. Because he is not resupplying batteries.
no, that is not the definition being provided here, and we'll read the same page only, we'll not go any other page.
Sure.
To a customer that resells such goods or material or part thereof, or processes or alters such goods or material or part thereof for the purpose of sale or resale.
But there is a definition of end user, right? I mean, that's...
End user definition, you have to go to VAT also. In VAT also similar definition is there, which says if you use those parts or machines or whatever product for producing something which you are further selling, it is not considered as end use. And the similar definition, similar, not same, similar definition is provided here also. I'll tell you the case which we have got into, where a petroleum company which is doing a projects, it's not an oil selling or buying companies, they are doing projects for petroleum companies. For doing that, a lot of big valves which comes in 100,000s value are used. Now these valves are part of the bigger structure. They are not selling, they are technically fixed structures. And fortunately that structure was in the free zone only. Fortunately they have all the exemptions from that perspective. So it is not considered as an end use, whereas the generator set being sold to a factory is considered as end use. So look at that definition. I sold cars to a car renting company. I sold cars to a car renting company. End use?
Yes.
I sold cars to a hospital. End use? Answers will change now. So you need to look at where the end use definition is coming up to. And even natural person is anywhere overarching principle to all these sections. Are you with me? Further, provided such activities are conducted in or from a designated zone. A designated zone as defined in the VAT law. Unless my transaction is not qualifying a designated zone definition under the VAT law and the transaction is conducted in the designated zone as a geographical area, it may not be a qualifying income. I am selling coffee as a coffee store in Javza food court in the designated zone. Is it a qualifying income? Why? No, I don't sell to natural person. I only have corporate clients. They come with a corporate coupon, then only I give the coffee to them. Can I be a qualifying free zone person under the definition of a VAT? Am I allowed to charge VAT on that transaction? Yes or no? Yes. You have to. Why? I want some answer now. I will not give that answer, but I am going to get an answer from you. Why and what point my VAT trigger comes? No. No. At what point after that my VAT trigger comes? What happens in designated zone which triggers from a non-VATable to VATable?
Service.
No.
It's a service. If I'm going to a restaurant, it is not a good I'm supplying, it is a service.
No, I sell coffee.
No, if you're going to a restaurant to buy coffee, it is not the good that I'm buying. It
Perfect.
is a service that I'm taking.
Still, before that, something happens. Exactly. The moment you clear the custom border, your goods are VATable. The moment box 6 triggers, you have RCM. And when box 6 triggers? When you clear the custom goods. Can I have a custom paid material in the free zone, in the designated zone? You can have. That means I'm sitting on two material. Qualifying and non-qualifying within the same free zone. Are you with me? Am I sitting in a same warehouse with the custom paid material and custom not paid material? Custom paid material, is it a qualifying income? But they are in geographical area and designated zone. Are you with me on this? So before you get into a designated zone story of free zone, please understand whether these are duty paid or non-duty paid. Can I have a service difference in designated zone? No, because I am going to test them for the free zone only. I don't need to test for designated zone for a service bound activity. So any coffee, anything will be a service and I'll test through the free zone. Right? If I am a free zone company, I am selling coffee, I am selling only to the corporate clients, can I take a benefit? First come to the definition of whether it's a goods or service. If it's goods, then go to my previous example of beneficial ownership, cut off. If it's service, play it around. How many of you cross the UAE borders by flight or ship or something? Arey, no one. I asked some little technical point and no one raised hand. Okay. When you cross the border, very simple. When you go to airport, please check your bills. There are two kind of bills you get. One where there is no VAT, one there is a VAT. On what items VAT is charged?
Which are consumed at the airport.
Which are consumed at the airport. But I am taking the burger to my home country also. But they still charge VAT.
It's assumed that you will be
Correct. So perfectly right example he said. If I am buying anything which is consumable, food or any kind of a snacking or anything which you buy, they charge VAT to you. Why they charge VAT? Because these are already custom paid material and then are being sold. If they are custom paid material and being sold, they are not a designated zone goods. They are non-qualifying income in the definition from a corporate tax perspective also. But if I'm buying a camera, mobile phone or laptop, I will not have a VAT element in that because those are not duty paid material and they are under the custom suspension. Records are there with the custom department. There is a tally which keeps happening with the custom records of those physical stock and they are meant or allowed to be exported out since these are not for UAE. Why? Because I already have a boarding pass, I cannot go back. It's meant to be outside. So that is where the logic of custom duty paid, non-paid comes into play. So coming back to when you see the designated zone definition, designated zone story, every example which was given by FTA is perfectly fine. Add a one pointer. The goods should be not custom paid. If they are custom paid, sorry, these are not qualifying income. these are non-qualifying. These are not a qualifying income in that category. Example, if I'm buying goods from mainland and I'm selling it out, my question will come, are you moving those goods to custom suspension or you're exporting straight? Let's look at a VAT law. Under VAT law, if I buy a duty paid material, I'll get a VAT? I'll get a VAT invoice from mainland? Are you with me? If I get a VAT invoice and I sell those goods, these are out of scope or 0%? Out of scope or 0%? Zero. They can be out of scope only in one condition. If you take those goods under the custom suspension records, that means you do a BOE and move the goods under custom suspension. That means if you re-import those goods back to UAE, you have to again pay the custom duty. Only that condition, it can be an out of scope. Otherwise, it is always going to be a 0%. And the 0% and out of scope will define your qualifying and non-qualifying income also. Please connect the dots.